Christine, thank you very much. Let's get a little bit more on the Turkey situation, the possible contagion to other markets. The MSCI's gauge of currencies in major developing nations fell by the most since May 2017 on Friday. The lira is now the worst performer globally among major currencies this quarter. Let's bring in Angad Rajpal, Head of Fixed Income at Emirates NBD Asset Management. Great to have you with us this morning. Thanks. Yusuf's on the ground in Istanbul. We were putting this market in context. I talked about the European bank exposure. You would say that we want to focus on NCB. By the way, BI, Bloomberg Intelligence, have just written a piece on NCB in Jeddah, along with Kuwait Finance. These are the two key names that could be market focused this morning. Just put the context around contagion for us here in the GCC, first of all.
I think in terms of trade linkages, your contagion is not much. That's not much of a scare. But obviously what we've seen over the last few years is some of the GCC banks have started to take an exposure to Turkey, primarily through acquiring subsidiaries in the Turkish participation space, Islamic bank space. So NCB obviously has some exposure to Turkey through Tufika or Turkey Finance, as well as Kuwait Finance of Kuwait has some exposure to Kuwait Turk. Now, some of these banks in the GCC have remained a massive anchor in terms of funding some of these participation banks. Even if you look at the way the Turkish space actually got hammered in the last few weeks, some of these banks actually were some of the better performers in the Turkey space. And I think it's important to put this in context that some of these banks in the Islamic space actually have much better capital ratios, and the fact that they actually have this support from the GCC banks, it does help them withstand some of these pressures much better.
Angad, I was speaking to one of the investors here on the ground, and he made the point that, look, in the case of Russia, they had petrodollars to fall back on. In the case of this country, in the case of Turkey, if they toughen it out and they hold on to their position, then, well, there's not really much of a fallback, is there? And what does that mean in terms of the wider emerging market prospects? And we talked about this a little bit earlier on in the program as well. Do you become more selective across EM and across the Gulf as well because of what happened here? A stark reminder of how quickly fate can change in this space.
Yeah, that's right. I mean, I think if you look at the performance for last week, despite sanctions on Russia as well as announcement of sanctions on Turkey, Russian space wasn't as badly hit. So I think investors are already pretty discriminating in terms of how they should be really reacting to all these events. What we've seen in case of Turkey is it's almost become a basket case. The rhetoric is just not improving. Really, I mean, the Trump administration has taken the sanctions to a whole new level. The trade tariffs when it comes to Turkey, doubling the steel tariffs to 50%, and those on aluminum to 20% has been taken it to a whole separate level. So I think investors are certainly putting Turkey in a different basket, and they would be a lot more discriminating in terms of how they actually look at the entire emerging market space.
Can I ask you, from the bond perspective, that's your domain, that's where you live, money going into bonds, money going into treasuries. Do you think there's going to be a dislocation in our spreads here? Do you think that our spreads will move out a little bit further? We look at it probably each time that you come in. I'm just wondering, what event does it take to form a contagion into our bond markets? Or do you think that these might narrow? Will money flow to GCC bonds or out of GCC bonds?
Yeah, I think investors are finding a lot more comfort in the GCC space now. So if you really look at the SEMB or the MB, they are down in excess of 2 to 3% for the year, but the GCC bond markets are just down under 1%. So they've actually held up quite better. So what investors are doing now is they're finding a lot of comfort because, as I said, your trade linkages are not much. Oil prices are holding up. They're up about 9% for the year. And for the second half of this year, you're really not expecting as much demand, or rather as much supply from the GCC space, given the prolific supply that we actually had in the first half of this year.
So what's the trade-off? How do you balance it out, equity versus fixed income in the Gulf? The Gulf equity markets are among the best performers in the world so far this year. Do you increase or reduce positions at the moment?
Yeah, I think we're getting a bit cautious, I'll be honest. So although you would find comfort, but if you really look at the month of July, the GCC bond markets did perform extremely well. That's really not to say that there's, the outlook is not positive. The outlook is certainly positive, but you really have to take a step back and take account of what's really happening in the rest of the emerging market space. to the extent to which you've actually performed really, really well. And if this Turkey spread moves were not to really stop, investors, there would be outflows from the bond market space, and in that case, I don't think it's really going to spare anyone, except that in the case of GCC, it should be a lot more resilient than the rest of the space.
Angad, you stay with us. Angad Rajpal, a little bit more market discussion to come on the show. Another blow to Iran's economy is on the way as the US doubles down on its efforts to choke Tehran's crude sales. We look at the details. That's next. This is Bloomberg. Now, Yusuf, you're on the ground. What's the very latest?
Yeah, well, let's talk about what the Trump administration is trying to do with Iran, because they're coming up short of their goal of blocking all of the sales of Iranian oil. Now, Bloomberg has learned that the United States is forecasting a 50% cut in exports when it reimposes energy sanctions on Tehran in November. Any significant reduction would be a blow, of course, to Iran's battered economy. Let's bring back in Angad Rajpal. He's the head of fixed income at Emirates NBD Asset Management. He's still with us from our Dubai studio. Angad, I look at the $100 call options for February and March for Brent crude. It's getting really, really active. Is geopolitical risk being priced in correctly now with the Turkey factor part of this broader equation as well?
Yeah, I think if you really look at the Turkey factor, if anything, such a kind of a beta or a contagion risk should actually start having an impact on global GDP, emerging market GDP, and if anything, it's actually negative oil from a demand perspective. But when it comes to Iran, what we've seen is estimates of Iran's exports being potentially cut by up to 1 million barrels. You've already seen indications from Saudi and Russia within the OPEC itself that they are willing to step in and increase their exports by 600 to 1 million barrels as well. So as we've said in the past, we really see both those events sort of getting neutralized. What's really tricky for oil prices here from our perspective is given the trade war or the simmering trade war with China, and you really see no indications of that sort of stopping. If that were to start having an impact on Chinese industrial production and demand for oil from China, that would certainly have a negative impact on oil. And honestly, I mean, that's really the transmission mechanism for the GCC, which have actually held up pretty well just because the oil prices have held up for the year.
Yeah, and that's in the GTV library there for anybody out there, the longest losing streak since 2015. If I look at the ambitions of the Trump administration, they wanted to reduce the sales from Iran to zero. They're not going to do that. They're not even going to achieve actually what the Obama administration achieved. So this is almost a little bit of a political slap in the face at this juncture in the sand to the Trump administration. China and India will not come to heel.
Right, and that's exactly what it is. I mean, we've seen official statements from China that they're not going to reduce their oil imports from Iran. They obviously have their own geopolitical issues when it comes to the Trump administration, when it comes to trade wars as well. So yeah, I mean, I guess the 1 million barrels is what the estimates are right now. To what extent they're able to impose and really coordinate with other allies for Iran to stop its exports, it looks difficult right now.
Angad, we had also developments out of Egypt where inflation unexpectedly slowed. It gives the central bank quite a bit of room to move. You're still overweight on Egypt. I mean, why is that? I mean, is it the currency stability with the high yields? I mean, it's a lucrative cocktail for you, isn't it?
Yeah, that's right. I mean, I think Egypt is really doing all the right things that some of the emerging markets are just not doing. You've seen policy missteps in Argentina. Now you've had a corruption scandal that's really come to the fore. In Turkey, there have been policy missteps. Once again, there's questions around central bank independence in Turkey. Amidst all that noise within the emerging market space, it's really Egypt that really stands out and a country that's really done all the right things. The inflation there last month was about 13.5%. We think that most of the subsidy cuts for this particular year are behind us. Now, between now and next year, 2019, you don't really have as much of subsidy cuts. So what you should really see is really inflation to come down. Having said that, I don't think that the Monetary Policy Committee, when it meets on August 16th, they would still cut rates given everything that's happening within the emerging market space, which means the 18 plus yields that you're getting on local currency are still pretty attractive.
Okay. They've still got value and a little bit of attraction there. Angad, thank you so much for being with us this morning. Angad Rajpal covering all things GCC and beyond. Head of Fixed Income at Emirates NBD.